Happy New Year, my fellow wealth hackers. Welcome to another episode of the Truth About Real Estate Investing Show. I'm the host, Erwin Cito. And how is your health and fitness? Mine took a bit of a holiday since March, maybe a lot longer than that actually, with my gym being closed on and off, playing a lot of golf in the summer, sitting on my butt at home, at my home office, working and making some good cash flow, stock hacking. My fitness definitely took a back seat. So I just recently joined, and it starts soon, an 8-week muscle building challenge. So starting next week, I'll be lifting weights 4 times a week, following a balanced meal plan for muscle growth, and hopefully getting lots of sleep. Oh boy. Then my gym was shut down. So you call it quits, right? No, I rented a bunch of equipment from Dan and Rachel, the owners of Radix Gym. I filled out their questionnaire, had a body scan done. Now they will customize a workout program and meal plan for my weak stomach and fasting schedule. I'm such a pain in the butt. One thing I did do well during the ongoing pandemic was I managed to keep the belly fat off by intermittent fasting. In the mornings, I only have coffee and water, and then I'll snack around 10 or 11 a.m. I'll eat a big lunch. As I'm recording, it's about 1:20. I still have to eat. I'll have a big lunch, then I'll have a good sized dinner as well. My weight is about the same, and based on my body scan results, my recommended fat loss based on the scan results is 1.1 pounds. Not too bad. No, actually, I'm pretty happy with that. If you too are looking to improve your health and fitness, I encourage you to do so. COVID has taught us a lot about the importance of health. Age we can't control, but we can control our fitness and what we eat. That's health covered. This morning I was listening to a YouTube, and I realized I haven't been spending that much time planning my education for 2021. I was watching a YouTube, and the gentleman was sharing how he's part of 3 big ticket masterminds. And I don't know what triggered myself, but I was thinking to myself, wow, I'm such a slacker. I don't do anything. I need to keep up. And then I sat down and actually thought about it. Did some light planning, and I had to remind myself I have a realtor coach. I've had the same one since 2011. We hired a real estate investing coach last year. I have 3 stock hacking coaches, including best-selling author Get Rich with Options Lee Lowell, who's our partner in delivering the Stock Hacker Academy. I just finished a level 2 advanced option traders course. I just renewed my membership for this year for 2 of my masterminds. I only belong to 2, so I'm remaining with the same 2. One for real estate investing, and that group includes many of the dynamos you've heard on the show, like Ryan Carr, Susan White, Sarah Copeland, Aaron Moore, who's coming up on the show in a few weeks, Rachel Oliver, all pretty well-known names in our community. And also I have a separate 7-figure entrepreneur mastermind group. Chair and I have also lots of organization system plans for 2021 as well. As always, continuous improvement and continuous education is a core value of ours. And if you just look at the success of the people, our fellow investorpreneurs who are on this show, they share the same values, including today's guest. And we'll get to John in just a moment. Speaking of successful investors, we have an old friend on this show, John Beddome. This will be his 2nd time on the show. John owns over 10 investment properties, including single-family duplex conversions, small apartment buildings. He's very well known in the real estate investment community as a realtor in Barrie, Ontario, and surrounding areas. He services primarily investors. I met John at a real estate networking group about 10 years ago because he loves to learn and network just like I do. Hence, we get along so well. He's a really good guy. Last year, John took the beta version of the Stock Hacker Academy, and in 2020, his return at the time of recording, which is about 3 weeks ago. So John's ROI, and I'm pretty sure it's gone up since December, was a really good month for pretty much everyone. His returns in 2020 are 57%. If you would like to see a free demonstration on stock hacking via Zoom, I'll be doing one on 1 or 2 of them this January. As many past guests have shared, this skill is a game changer. Hence, I'm on a mission to share this knowledge with as many people as possible. No different than investing in real estate. Like my friend Russell Westcott, best-selling author, owner of over 100 investment properties, he even says, with real estate investing, you need to divide your portfolio into 2 things. Part of it to make money with, so like flips or high cash flowing real estate, and the other half is for building wealth, right? And because I invest primarily in Ontario, affordability is not what it used to be. So I still continue to invest in real estate to build wealth, and I stock hack to make income. And this is new in 2021. In 2022, we did a pretty good job of letting our investor community what the best investments are. Again, real estate's for building wealth, stock hacking for cash flow. You need both. People keep asking which are the other. I honestly believe you need both. And if you're not sure what's best for yourself, we offer free trainings in both. Like I mentioned, we're offering. I'm doing myself free demonstrations in January, just one or two of them. To register for the next one, go to stockhackeracademy.ca/demo. Of course, you can go to the website or any of my social media. All my links and bios have links to this. Again, it's www.stockhackeracademy/demo. Sorry, www.stockhackeracademy.ca/demo. Of course, I think you all know I'm a big believer in real estate. For anyone who's been holding real estate for the last 10 years, you've done pretty well with the amount of money that the governments are planning on printing. It looks like they're going to continue to do well. So for a free investment training webinar on the number one investment strategy that we ourselves practice, myself and my team, I do this so personally. We offer a 90-minute class via free training via Zoom, and then you can go register at www.investortraining.ca. Again, that's www.investortraining.ca. Everybody needs both, in my humble opinion. I do both. Many successful people do both. Many people on this show do both. Check it out. It costs you nothing to learn. And this could be a game changer for many people, including our guest on this show, my friend, John Beddome. Hi, John.
Hey, Erwin.
What's keeping you busy these days?
Life is good. I have a lot to be grateful for. It's been a busy year, busy with my family. Business has been great. Investing, real estate market's been great. Stock hawking as well now, thanks to you.
It's not thanks to me. We've offered that information to a lot of people.
Well, I was a skeptic for a while, but I'm glad that I got onto it.
Who wasn't? My friend offered me free training for 2 years, and I did nothing.
Oh, really?
Right now, everyone's kicking themselves. Like, why didn't we know this 10 years ago?
Well, it's like real estate investing. I wish I got into it earlier. Right? Mm-hmm. I started in my late 20s, and sometimes I get a very young person reach out to me. You know, they're still in school or they're living at home with their parents, and mm-hmm. they're thinking, you know, maybe I should buy an investment property and keep living at home. And what do you think? And I'm like, yes, do it. Go for it. You mm-hmm. know, but then again, you know, how can you regret? You just take action when you take action and roll from there.
So you said you started when you were 20?
No, 28.
No, 20s. Okay.
Yeah.
That's pretty good.
Yeah.
What were you doing when you were 28?
I had finished university the year before. Mm-hmm. I did a business degree. And when I was in university, I started a contracting business. And I decided to continue rolling with that for a little while after. I had a friend who also had a lot of experience in the construction business. Actually, he was my roommate at the time. We watched a lot of HGTV. We, you know, back then it was like 2007 was flip this and flip that. You know, before the American market changed, it was the, you know, really part was that we can do this. We know renovations.
Right. Yeah, for young people who don't know, like that was the buildup of the housing bubble.
Yes, exactly. Exactly. Yeah. We jumped in. Fortunately, it was a time when financing was
a joke.
Easier than now.
A joke. Fog and mirror, please.
Very much, yeah. Also very much lucked out because the realtor that I found was also an investor, and he also did private second mortgages. Ooh. And I could not qualify for CMHC. I could qualify for 25% down. He gave me a 20% loan to value second mortgage at 9%, and 5% down I actually borrowed. So I know there's stuff out there about getting into properties, you know, with no money down, but I actually did. I don't know, maybe 2007 is long enough ago to admit that I actually borrowed the 5% down. Because I don't think...
you borrowed it from your parents, right?
Yeah, something like that.
Something like that.
Oh yeah, gifted. That's a lot, yeah.
Gifted, right.
Yeah, I can't do it from credit card. Don't do that. Anyways, we got into this property as experienced and as smart we thought we were with renovations. It took longer. We were also busy, working on other things. Made a rookie mistake that I think a lot of real estate investors do, which is do everything yourself. And quite frankly, I didn't have the resources to, hire people to do a lot of things. So with my friend's help, I worked away at it. And when we put it on the market, we had to put it on higher. Our realtor, who is, I'll tell you a bit about more him later, but he said, well, why don't you just rent it out? It was right near Georgian College in Barrie. 3 bedrooms upstairs, finished basement, 3 bedrooms downstairs. At the time, it was $400. I had the biggest room. I think I rented for $450 at that time. So I had first and last and all those rents rented right away. And I was like, yeah, this business makes sense. Now, I won't go off on some of the lessons I learned being a brand new investor landlord. I don't really like the landlord term. It's kind of archaic. I'm no aristocrat. But anyways, I digress for a second. I'll move on. I
like to say it, I don't lord over anyone.
Yeah, that's a good one. That's a good one. Yeah, you know what? It was a really good experience because I really learned. Like that was, the beginning of my education in investing.
So you had no other prior real estate education other than TV?
Exactly.
Having contractor experience?
Exactly.
This is the first mortgage you'd ever done?
Exactly. My realtor, he became a mentor, like a coach, a financier as well, because I ended up buying another property the next year, a duplex that I lived in the upstairs and rented out the downstairs. And then I found a networking event. And that is around the time that I met you. And I really got into this. I really dove into educating myself. A lot of things, I learned to do by doing, but just, being around other people that are doing the same thing, really helped me progress, motivated me to go further. So in 2010, I bought 3 properties. And interestingly, one of them I was able to do with a vendor take back mortgage directly from the seller with 5% down again. They were so impressed with, they'd had the property for 20 some years. The skills that I had picked up from other people, I was able to increase the rents a lot, renovate it, improve the value a lot, refinance it, pay them money back. They were so impressed that they decided to JV with me.
Oh.
So I ended up JVing 3 properties with them.
Oh.
One of the properties that I bought that year, I wanted to just say, because you'd asked me when you'd reach out to me. This fall, I sold a property, $410,000, and I bought it in 2010 for $140,000. So that's a pretty good return. I became a realtor. I continued with the business that I had with my friend for a little bit after I became a realtor, but for about the first 6 months, I just really got into it from there. And the interesting thing about that property I bought for $140 is I sent it out to all my clients, and I was meeting new people, new investors, new contacts through, our networking groups. And they were always looking for deals. And I thought this property really makes sense. It's power of sale. It's really rough. It's in a transitional area close to the waterfront that I believe is going to do well long-term. And nobody would take it. I ended up putting in a low offer. And surprisingly, after some negotiating back in the day when, I think it was like a week we were negotiating back and forth, but
the old days.
I got it for $140. And I put a lot of work into it. I refinanced it and took my money out the next year. So I basically had a free house there. And it just built up from there.
I miss
and that
days.
Property's funded my stock hacking.
That's the one?
Yeah.
Okay. All right. John, you said a mouthful.
Yeah. Once I get talking, I kind of go on. So
in about 10 minutes, you covered 4 years. And you basically yada-yada'd everything before you were 28 years old.
This is your show. You asked me what you'd like to hear about. What would your listeners like to hear about?
I think we just need to touch on that you finished university when you were 28 because you were a very high-level skater.
Yeah, I was a competitive figure skater.
Yeah. Were you doing any school when you were figure skating?
No, I worked part-time. Figure skating is very expensive.
Yeah, right.
So, I worked part-time. I worked in the restaurant industry. I got into sales. I actually used to sell security systems. Yeah. And then when I finished skating,
before that,
Yeah.
how long were you in skating and not going to school?
No, like right away, actually. So it was kind of neat. It's interesting looking back how things unfold because I'm from Manitoba originally.
Mhm.
I moved to Edmonton, Alberta to train at a very high level club there
The highest?
in Edmonton. Yeah. At the time, the Royal Glory Club was definitely the highest. And it was a great experience. I think I learned a lot about life and about business from being a competitive athlete.
How old were you when you moved to Edmonton?
It was right on my 17th birthday. I left home. Yeah. Because I'm from a rural area in Manitoba, a farm north of Brandon. And I'd been skating since I was, this is pretty much a little bit after I could walk, but competitively skating since I was 7. My sisters were in it. My parents split when I was quite young, 5 or so, and 4 kids, single mom. She had a business to run, her farm. So she got us into skating, and, there wasn't like somewhere to send for babysitting. So I was hanging out at the rink anyways. I played hockey as well, but skating, I just really progressed with. It was a great experience.
Okay. Because I just wanted someone to think that, wow, it took you a long time to finish school.
Yeah. 28. Well, I wanted to do a few degrees, I changed my mind several times.
I'm a doctor of 3 different things.
Yeah, no, I did a BCom. Actually, I went to Georgian College first. I did a business diploma there. And I decided I was able to transfer my credits to Ryerson University, and I finished my commerce degree.
Oh, you went to Georgian and you didn't figure that first property for student rental?
Yeah.
Wow. Well, my school's right there. I think students go there.
But you got to realize my mindset was,
flip.
I don't have any money. I'm putting in literally every dollar plus borrowing. I want to get this right back out.
Right.
And plus, it was so easy on HGTV, right? They edit it so well.
Yeah.
Right? I never thought of so-called landlording. It wasn't something that I thought of at all. It's just something that I literally fell backwards into, and it's a blessing because it's not an easy business. There's no, like I wanted when I was young, it's no quick win, but it's an amazing long-term investment. So happy that and especially to end up in Southern Ontario. I mean, I could have stayed in Manitoba or I could have stayed in Edmonton, Alberta, and things would have turned out differently. Southern Ontario. After I finished skating, I just fell in love with the Barrie area, and the weather's better here. There's a lot more opportunities. Yeah. My mom, when I got in my real estate, I just said, "Why don't you come back here and sell real estate?" And it's a little bit different. It's a different market.
Wow. Imagine if you went back and did real estate there versus here.
Totally
2008, right? You said?
Yeah.
Yeah. The trajectory of those real estate markets are a little bit different.
Yes.
You made the right decision.
Yeah.
Financially.
Yeah.
Okay. Much to unpack. Do you remember what you bought the first property for?
Yeah. The student rental I bought for $196,000 in 2007, and I sold it early 2017. It was the first property I ever sold. I was always planning on, long-term, but I sold it for 392. Yeah, 392 in 2017. Exactly double. Yeah. It turns out exactly double.
But you put money in though, right?
Yeah. Oh yeah. You know what? I've renovated the house several times. I mean, the one thing,
student rental. Yeah.
You know what? You're in the business as well, right? And it's great cash flow. It's certainly, if you're in the right area, a great business. I know people that, that is their specialty and they do very well at it. I decided by that time, by 2017, my life was completely different, very busy. I had a property manager for half of my properties, and I was doing self-managing the other half. And I asked my property manager if they would manage the student rental, and they said no.
Bad sign.
I got a quote for managing it from somebody that was, I can't remember exactly what it was extremely high. And I just thought, you know what? I'm going to fix this property up one more time. I've had a heck of a run on it, and, move it into other things. So,
right.
I am a long-term investor, but at the same time, I believe that there does come a time to sell. Some of the properties in my portfolio, I plan on holding. I mean, my kids will hopefully, maybe I never want to sell some of them. Others are more of a medium-term play, and then some that I've done have been more of a shorter-term horizon in mind, right?
Yeah, if Ann Moore was on the show.
Yeah,
Anna
yeah,
Moore.
yeah, I know Ann, yeah.
Yeah. So if anyone wants more details on what it's like to be a Georgian college landlord, property manager, go back and listen to my episode with Anna Moore.
Right.
I believe the horror tours, folks, like there's lots of good things about real estate, but there's always some fun stories. And I remember the story that she shared that she had some police college students.
Yeah.
Like what the program is.
Yeah.
And they kindly removed all the drywall in her house with a baseball bat.
Yeah.
Yeah. It's very nice of them.
I had fun with the automotive marketing students. They were kind of, I don't know, the crowd that was like, what do you want to take in college? I don't know. I like cars and partying. So yeah. I've got a lot of those stories too, but another time.
You need to put that on your rental application. What do you like? Partying. Oh, okay. I'll put it in this pile.
Yeah.
Okay. How about the property in 2010 that you bought for $140,000?
For $140,000.
What was the strategy there?
2-bedroom. Actually, I had a third bedroom, but it wasn't much of a bedroom. But anyways, it is a good house, great location. The strategy there was definitely on the location, because some locals may say that maybe it wasn't the best street, but I'm looking at it.
$140,000. What do you expect?
Exactly. and I'm looking at it, I'm like, you know what? It's like 2 blocks from the beach and the waterfront downtown Barrie. It's a huge lot. I would have held it if I would have had, seen more opportunity to redevelop it further down the line, but it's also semi-detached.
Oh.
So, yeah, it worked. In the beginning, I had it, financed to the hilt. So it didn't cash flow well in the beginning. But again, I refied it and rents came up over the years. Mm-hmm. And that's something that I explain to people that are new in the business that, if you're in a great area where rental demand is really high, strong economic fundamentals, jobs, population growth, and you're getting in and the cash flow is, not what you were hoping for, but it's at least decent enough that, it's not going to, hinder you. It's going to grow. You're going to do better over the long run. That rental demand in the long run is not going away. Whereas another strategy is you could choose another area, and people have done very well, but sometimes I find some people will want to go to an area that they will find a little bit better immediate cash flow, mm-hmm. but it's because the employment numbers aren't as strong, the growth isn't as strong. You can keep going further and further in different directions, and perhaps for somebody that strategy works for them. But I think it's great, and I'm not just plugging Barrie here. There's a lot of great areas, but you really want to consider the area.
Well, you're from Barrie. You're just speaking from experience. So.
Yeah. Well,
we'll excuse this for once.
Yeah, so okay.
We can just talk theory.
Yeah. I'm a little biased because Barrie's my new home. I've been here a long time. Mm-hmm. I love it. So.
Well, let's talk to the location and why you chose it. Was it close to more expensive areas?
So there's
it's near the water. It had to be close to some experienced areas.
So there's some very, at the time they were just being built. They're very, compared to GTA listeners, they're not pricey, but they're waterfront high-rise condos overlooking the water. You've got the beach, you got parks. Mm-hmm. You've been up. I saw you on social media. You took your family up. Really nice area. And it's improving a lot more still. I still own another property on that same street, and actually another one like a kilometer or so south and east to that, overlooking the water as well. Mm-hmm. And another one that is definitely one of my forever properties, a fourplex that is on the north side, the east end of Barrie, that also has a view of the water. So I think in the long term, that area is going to do amazing.
Excellent. Okay, so let's finish off this example. Did you have to renovate it? The property you bought in 2010, $440,000?
Oh yeah, it was a dump. The reason it went power sale, I don't know. The previous owners, they just let it go to. It had sold for $170 only 2 years earlier than that. So it had sold for $30,000 less, and the market. At the time the market was kind of flat. Like maybe it was climbing a couple point or two here or there, but yeah, definitely they'd run it right down. So I put a lot of sweat equity into that one for sure.
Right. For the listeners' benefit, power sale, the bank was selling it?
Yes.
Yeah,
Like
so
in other regions, you call it a foreclosure. The
Right,
bank had taken it. Yeah.
right. Just for anyone who's newer to the industry, power sale,
Mhm.
because some people might be listening and think, oh, well, that's a bankruptcy, that's a
Right.
foreclosure,
Right.
but we're Canadian.
Right. I could explain the difference in different regions, but that's another
Right.
topic.
Just simply the bank is taking
That's right.
control of the property,
Yeah.
assuming that the owner was not making mortgage payments. So
Exactly.
the bank is taking control of it, and they're the ones who are driving the sale.
Exactly.
And then, so how much did you have to spend to renovate it? Did you do it yourself again?
Yeah, mostly.
You did.
Well,
it's only 2 years removed.
So from my side hustle when I was a student, I know how to paint. I still know how to paint. But once I progressed in business and life, and especially the last thing I painted was the start of COVID, a room for my daughter, like anything else. And that's just like, I want my contractors to keep working on some other projects and my clients' projects and stuff. And I was home anyways. But yeah, no, on that one, I did paint it. I got someone to do the flooring. I did appliances. Yeah, I put money into it. But yeah, in 10 years, definitely did very well on it.
Do you remember what you rented it for the first time?
Back then was $11.50.
Oh, and people wouldn't buy this thing?
Yeah, it was $11.50 plus all utilities. Now that was after I'd fixed it up, right?
Right. Dude, that's almost 1% rule.
Oh yeah, no, I know. It was a no-brainer
on
to
a
me.
single family.
And you know what? Like looking back, it's funny. You know, the mentality at the time was, I don't know, is the market going to go down? And there's always kind of that, or you know, the cash flow isn't that great. Like, you know, and it's just you can always find a reason not to do it. But I think one of the reasons was the location wasn't the best, but it wasn't terrible. I mean, we're not talking about a street that, you know, has like crime, or like you can still attract a good tenant profile, but older, and the curb appeal wasn't that great, and inside it had a bad smell. And
That's
as a
the smell of
buyer,
money.
a bad smell is a smell of money. Yeah, the bad smells you can get out.
It's funny now because I kind of wish we wore masks sometimes back in the day.
Exactly. Oh yeah.
Do you need a mask?
Yeah.
While you get the mask, you gotta go get the offer too.
Right. Yeah, exactly.
I remember like even just like 8 years ago.
Yeah.
If it smelled like curry, no one would buy it.
Oh man,
that was the best. If it smelled like cat pee, you probably could get a mortgage. But
I have a company that in Barrie that does biosweeps. They can get the smell out of anything.
That's impressive.
So bad smells are money.
Right.
I mean, you talk about the worst cigarette smoke, cat pee.
Yeah.
Sadly, they've even done deceased body removes. Like
that happens.
They seal off the whole house. They use like hazmat type suits. You can't go in there for a long time. And they'll repeat the process as many times as it takes to guarantee it. And it's not expensive. I mean, depending on the size of the property, it's $1,000, or I shouldn't talk exactly the price for him. He'll be like, hey, I can't always do 1,000. And 1,000 and up, depending square footage and all that. But
right.
It's well worth it, right?
I've watched CSI, so I can think of bad examples.
Yeah.
There's no number you could pay me. And then, sorry, you sold it for how much?
$410,000.
$410,000. No one was interested. Because you're a realtor.
Well, they were interested when I put it on the market this year.
Yeah?
That's for sure.
What month was that?
September. It closed.
This past September.
No, September 2020.
Yeah, this past September.
I don't know. This year seems like it's been like a decade.
I know. It's slow and it's fast and it's weird.
Yeah.
It's like, it's slow in that when's this going to be over?
Yes.
It's fast and like, we've done well for ourselves.
Yeah. Yes, for sure.
We'll get to that actually. You put it on the market September 2020?
Yeah.
What was the action on it?
It was really good. Sold it right away.
5 offers, 20 offers, no offers?
You were getting multiple offers most times, but I actually just got one really good offer. And right when my project to get it ready went over a little bit, I would have liked to have, the summer was like super, super busy. And then there was a brief pause right in the beginning of September. So my timing wasn't perfect, but I mean, in 10 years, I mean, whatever. But it was that back to school, I think, because schools were closed down since March. There was a little bit of a pause, and then it just took right back off. But you know what? In multiple offers, I might have got a pinch more, but it was a good house. The people that bought it to move in. It was a guy who had his kids on the weekends, so he didn't need a lot of space, but he wanted that really big yard, the great location close to the beach. And, he had enough room for his kids on the weekend, but not like ideal for, a bigger family. Right. So, it worked out really well. And yeah, I closed it was the end of October when it closed.
Cool. We'll get to that. We'll get to closing.
Yeah.
Just some curiosity things, because you're a realtor. So
yeah. Sure.
I want to ask some strategy things.
Yes, of course.
What was your strategy when you were selling the property? Were you listing low to draw multiple offers, or were you had a list price that was close to what you wanted?
It was pretty much close to what I wanted. Yeah.
Staged?
No.
Yeah, for a 410 property.
You know what? There's just so little in the market. I think staging is a great strategy, especially for larger homes. But yeah, this time I decided not to.
Do you know where the buyer came from? Were they local, or were they from
GTA.
Toronto?
8 out of 10 of our buyers are GTA.
Wow. And you're a landlord as well.
Yes.
Do you have much turnover? Are you seeing the same thing for tenants?
You know what? It's almost the same out of the GTA, a little bit less, probably like 6 or 7 out of 10. But not all right from the GTA. Some are coming up from, Alliston, Newmarket, because it's like 20 minutes further, and rents are still a little bit lower than there. So
interesting. I ask these questions because I keep hearing it from people because we've had people on the show from other areas, like Kayla Andrade from Kitchener. Same thing, like almost all buyer actions from Toronto people, tenant actions from Toronto people.
Yeah, for sure.
And then now we have Barrie. Now we have information from Barrie as well from the street.
One of the things that's been a shift for finding tenants this year is, demand has been building and building and building over the last decade. Like vacancies, just there's a lineup for places, right? So for COVID safety, and we've done this before in years before sometimes too, but we're basically just application up front, doing video tours of the place. We shoot a video tour, not showing anything if, somebody's still living there. And then, if you're approved, then you get to go see it before we sign up. Saved so much time.
I know.
It's something that we are going to continue doing.
I know, it's nice.
I can see maybe like there's been a few instances where they're not 100% approved, but they're strongly vetted. Yeah. Okay, these people are solid.
Yeah, at least they submitted an application.
Right, they submitted an application. Let's see if it's the right fit for them.
So much further than the old days.
Exactly. Yeah, I used to do like, kind of like an open house kind of thing where I would, I have somebody who works for me full time for my real estate business and my investment properties, and she does all my online ads in addition to many other things. You've met her before, actually. She's been with me for 10 years. We used to do the booths back in the day.
Right.
Yeah. So, anyways, just a lot of back and forth. Like you put an ad up for rental for Gigi, like 300, 400, 500 hits. You get all these emails. Is this still available? A lot of questions back and forth. So for a while, pre-COVID, we just do like a 1 hour window. Like she'll go show it on Saturday between 1 and 2. Sometimes if you got time, ask them some questions like, would you mind telling me a little bit about yourself? And then if they're not fitting for some reason, it's but you just open house, let anybody come. And worked well too, except you'd spend a lot of time talking to a lot of people, and some people would get very frustrated, and you just get this crowd like. Yeah, it's
good problems to have.
Yeah, as it got busier and busier, and the crowds got bigger and bigger, and it's just kind of like, okay, maybe we gotta figure out a different way to do this. And then when COVID happened,
we were forced to.
We were forced to, and it was a very, like I said, it's a business practice that we'll use moving forward for the foreseeable future.
Because that's the thing about COVID times is the demand was actually probably stronger, and our rents are higher. I hope everyone listening to this show has investment properties in the Golden Horseshoe of Ontario.
Yes.
Or I hear there's other markets that are strong, like around Greater Vancouver area. I'm sure it's just as strong.
Right.
But man, for those who don't, this is what we're dealing with.
Right.
We can do these things like these using these virtual tools. Mm-hmm. We couldn't get away with that like 10 years ago.
Right.
When the tenant demand wasn't that strong.
Right.
but we can because rents are still going up and vacancies are like nothing.
Right. Yeah.
The last apartment I rented, I had the tenants do the video.
Right.
And I paid them like $50 to do it.
Right.
They did it with their phone.
Yeah.
They let me use it. I give it to my PM to use on the Kijiji ad.
Yeah.
And then same thing. We got like 3 applications without them ever seeing the place.
So another hack.
I like hacks.
I like to check properties. I've learned over the years the hard way. Okay, the rent's always come in. I haven't been into the unit for 3 years. It's fine. And then they move out and it's, we're not renting it right away. I need to call my contractor. It's so for smoke CO2 detectors.
Oh no, brutal.
Please send us a video. Everybody's got a video on their phone.
Yeah.
Send us a video on your phone of checking.
That works.
Each per floor. If it's one of our townhouses, each floor, they send it in, and it's great for them too because, well, obviously in the COVID era, it's necessary. But even before that, when we're doing it, it's great, like coordinating people's schedule. People work, and what time works for you, and what time works for them, and driving around. And
the pet they have to lock up.
That's it. You can come in, but our dog. We don't want to create our dog, right?
Yeah. Or they're just embarrassed by the mess.
Exactly.
Or they have kids that are sleeping, or night shift people.
Exactly. Right? Yeah. Exactly. And then you have a record of it too.
Yeah.
Right?
Yeah.
I mean, you have an actual record of that video of your smoke CO2 detectors working.
Yeah. Yeah. And then if it ever comes back to you and like, well, look who sent it to me.
Mm-hmm. Yeah. That's right. That's right.
That's not a bad one, actually. Do you have a preferred model? You saw that string on our Facebook group about a particular manufacturer of CO2 fire smoke alarms that seem to be consistently bad for everyone. Oh, maybe you missed that one.
I don't know. I get my contractors to do them.
They must have a good one.
When we can, we buy them in bulk, but they're usually around. I mean, it's the law to have CO2 and the combo set is $5 more than the other one. So it's you pick up a bunch of them and then we have them handy. And if the handyman has to go in there to do something else, it's always on his list to, hey, could you check them out when you're there too? Mm-hmm. So once in a while, people take them down, just make sure, we always make sure that everything's up to date and working.
Yeah. I was doing a property inspection just a few weeks ago as part of we were appraising properties. I had a combo unit just outside a bathroom door. So it seemed the shower steam kept setting it off.
Right.
So, yeah.
Yeah.
We'll have to fix that one. Probably replace that one. So this is supposed to be a real estate show. I remember last time you were on, you were talking about, do you have some property or you've invested in some property with people in Cambodia?
Yeah. So my in-laws, my wife's brother, my wife's sister, they have a farm already. They've been there for generations. And we've helped them expand that. And it's something that, my wife and I have been talking about a lot lately is, we set goals and, what are we really hustling for and what's important to us and what do we want to do? And as soon as this COVID situation has changed and it's safe to do so, we're going to go take a trip as long as we can, as long as a period of time as we can. Now with kids, obviously be summertime. And then we were also talking about, things that we want to do and work towards, because you have these things that motivate you so that when you don't feel so motivated or you're dealing with some difficulties in business or investing, you focus on these things to push through. Is we want to renovate our kitchen. And renovating a kitchen when you have 3 kids, 2 of them very young, no thanks. So it's like, okay, could we do what we did last time we went to Cambodia, which was 1 month in the summer, and we'll get the contractors in then, right? So kind of a double wish list there. Who knows what's going to happen in the world? Hopefully it's this next summer, but it's one of our shorter term goals.
Nice. So a couple things I want to ask. So you're a realtor again.
Yes.
You work with investors.
Yes.
What do you think your average return is on your real estate?
You know what? I bought a property in January.
Mm-hmm. This past January?
Yes. right before COVID. Well, I actually bought it in October of 2019.
Right.
We closed it in January.
Right. Lovely time.
Yeah. Purchase price again, obviously same as what I sold the last one for. It's $410,000.
Mm-hmm.
It's a 3-bedroom, 2.5 bath, finished basement, freehold townhome in Essa, which is it's like 10 minutes west of Barrie. Thing I love about the area is property taxes are a lot lower than Barrie, like $1,800 a year. Yeah. It's now worth $490,000.
Oh boy.
We have amazing people. We're very happy to call it home. We're paying $1,750 plus all of the utilities. Very, very easy property to manage. Again, there's no condo fees. It's like 10 years old. Yeah, could do value play, have the team of contractors could, buy something, fix it up. But this deal was on market. There's actually a little bit of a pause. I wouldn't call it like a pause, just kind of like you go through these periods since 2000. Well, you remember how crazy the market was 2016, 2017. And then because the market goes from like 10 offers of property to 2 offers of property, sometimes some people could just kind of sit back and go, wait, well, maybe we should wait. Maybe it's going to slow down. And just like timing and stock hacking, it's like, no, maybe that's the time to grab something.
Mm-hmm.
I recommend to people like the best time to shop for properties is often like middle of winter, especially in Barrie, because we get a ton of snow and there's less, the volume usually slows down a little bit, although in recent years, that's not as much been the case. But hopefully any realtors listening, call your realtor first before you want to do something on a holiday. But it is a good time to shop. So don't call up listing agents on Christmas Day and want to go out and buy something. But, call your buyer's agent, your investment specialist you're working with and say, hey, can you book long weekend or whatever? Again, I might get like pounced at the next RICO meeting or something. But
it won't be in person.
Yeah.
You're strangling over Zoom.
Yeah. But yeah, you just, sometimes everybody wants to move in all the home buyers, especially people who have kids, they want to get them settled in before school, right?
Mm-hmm.
The spring, everybody's looking. And there's this time, like long-standing idea of spring is the best time. And for a lot of people's lifestyle, it does work. And I'm not saying don't buy something in spring. You find something that works for you and what you want to do.
Mm-hmm.
But sometimes, when it's a snowstorm and it's, the first week in January, in the middle of a lockdown. Yeah.
How many buyers do you think are out there?
Yeah. Look at the virtual tour. Hopefully, you make your offer. Hopefully there's less competition.
Mm-hmm.
And then go check it out on your inspection, right?
Or just send the inspector through.
It's just
in a hazmat suit.
Exactly. It's COVID era. Minimize your contact. Listen, if it's not your own home, like when you're shopping for your own home, when my wife and I bought our current home 5 years ago, we wanted to go through things and spend time and talk about it and how it fit our needs. But when it's an investment, you're looking at the numbers and, you know what you're buying. I have clients who have bought multiple properties that they have never seen. Like they didn't see them when they bought them. I went through them. They've worked with me for a while. They said, okay, John, tell me what the numbers are. Okay, how did the inspection look? Okay, this is what we're offering. And then, the property management takes it over and they've owned it for years and they've actually never seen it, right? Like I think maybe that's not a newcomer strategy. They may not feel comfortable with that, but I just think there's, if the property, number one, you focus on your clientele, which are your renters, right? They're your customers. What works for them? And if you talk to somebody like myself or someone in another area, like, for your team, they know what rents are. They know what layout and what sizes and what locations have the best rental demand and what they're going to get. And that's what's really important. The property itself is important, obviously, especially if it's an older property. You're just checking over things. You check over a newer one, obviously, too, but you dig a lot deeper on older ones. But yeah, that's the most important thing. A lot of people, they focus more how much can I get it for? What can I buy it for? Not on what the long-term strategy is. And wow, this is going to attract a really good tenant profile. It's going to be easy to rent in any kind of a market. That's first and foremost in my mind.
I think what's been missing, it's actually funny because it's only when you mention this now that I think of it. In most real estate education that we've seen, it's the expectation is the investor knows more than the agent. When it's in yours and my example, it's rarely the case. Like they're not from, if I'm from Toronto, we're in Oakville right now. I come to Barrie.
Right.
I know investing.
Right.
I don't know Barrie.
Right. I can tell you where the 100-year-old tannery is buried with toxic stuff in the ground. And I can tell you about, Barrie's a very nice city. We have very few problematic areas, but there's a few corners that you probably want to avoid, right?
Or even just simply, I can set you the tenant profile I want.
That's right.
And then you can go to the area.
Exactly.
And then help me with the transaction.
Yes.
And then you know who the property manager is, the best one in the city is.
Yes.
So that I don't have to deal with it because I'm not from town.
Yeah.
Right.
And it fits into the investor's lifestyle too, right? So what works for you may not work for me or vice for whatever, or somebody else. Like, I have, there's some people that they want to do a very advanced value added play, but they have a very busy, hectic work life and,
and 3 kids.
And 3 kids like me and no experience with renovations and you know what I mean? So sometimes, you pay a little more to get something that's a little more ready, or, it maybe needs some stuff that I have a team set up that can assist them with. Like you said, a tenant profile that is easier to work with, more consistent, lower risk. There are other people who will go into very low income housing and they have the time and the experience and they know how to deal with, higher default rates. And that is not my forte personally. I like middle income. I can't be too specific on who I don't like. That's not appropriate. But, when you become an experienced investor, you realize what properties will attract great customers to work with in a province that is not favorable to work with not so great customers, right?
Yeah, which actually kind of brings me to stock hacking now.
Yeah, let's talk stock hacking.
Because it's kind of funny. Because it's funny because, you and I both experienced the crash.
Yes.
Actually, before the crash, because you learned stock hacking around the same time I did.
Yes.
And we're like, we're so good at this. We're making lots of money. Screw real estate.
Yes.
I don't know if you said that. I don't even know why I said that.
Well, I've had my days where I've thought about it. I'm like, why am I doing all this work? Why don't I do this? But I think they both go very well together. But sorry.
But the roller coaster, and then the market started crashing because it's triggered by COVID, and we're like, this sucks.
Suddenly real estate is the best thing ever.
Once the money started, like CERB was rolling out, EI, and all those things, like, okay, we got all our rent. Yeah. Wow, this real estate stuff's great.
Yeah. So
and then recently, this has been since the market bottomed on my birthday, March 23rd. So I always remember that.
Wow.
But since then, it's been pretty darn good.
Absolutely.
And like you said, they go together.
Yes.
Because the way I was able to dig myself out of the hole was because I had all this real estate money.
Yes.
That I knew strategically, this is it.
Yes.
This is the strategic moment to be investing heavily.
Yes.
And it's worked out quite well for us.
Yes.
And then your experience?
Well, I took the very first course that you took.
Oh, you took the beta?
The very first one in September.
Oh, wow.
And
that was courage.
Some of the crowd that had been doing it for a while already were so enthusiastic. I was like, okay, I'm not drinking the Kool-Aid. Like, what is going on? That was maybe a little bit too harsh. I was very skeptical. Just because I'm, such real estate enthusiast, and I thought, this is going to be very time consuming. This can be very risky. Yes, I studied finance in university years ago.
You're already very successful in your real estate business and your real estate portfolio.
Exactly.
Right?
And I sort of felt like, I I didn't think that it would fit my lifestyle, right? So I took the course, but I was very impressed, and I was enthusiastic about it enough, just enthusiastic about it enough to at least open the account. And I had just sold a property, so I funded it a little bit. I used that money from the sale of that property in 2019 to buy the one that I talked about that I bought in 2020. But because that property I'd sold, again, I had owned it for almost a decade. It was a good profit. I was just, I've just funded it a little bit, and I was going to do something with it, and I just procrastinated. And I was impressed with what you guys were doing, and I was following it. And it was one of those things that I realized that unless I actually did it, I wouldn't learn it, and that I was prepared to try it a little bit, get into it slowly. So I actually tried, I did one trade in February. That was my very first. So that was I procrastinated 6 months, but I did a trade. Okay. So then the downturn happened. And what really impressed me, Erwin, was through a 30% or so, it depends on which index you're referring to, a 30% pullback, how the strategy, yes, there was, setbacks. Yes, it was difficult for people, but how so many people, including yourself, and that we mutually know through your network and through the investing community at large, are doing so well with it. And when COVID hit, I was home a lot. I remember the beginning of COVID, schools got closed. I think I spent about a week in my pajamas watching Netflix, taking calls from stressed out clients, wondering if the sky was falling, figuring out what we were going to do next. And then I thought, why don't I get into this? So I dove back into the education. It would have been easier if I would have started trading right after the course when things were kind of fresh, because I kind of had to. So I was following you guys. I was testing the waters, and I started off very conservatively because I've worked very hard to get to where I am. I have a family to support, kids to support. I have a mom that is going to need help later on. Farming is her passion and a great lifestyle, but it's not always the most profitable business. So there's my in-laws in Cambodia. I have money is not something that I just play around with or whatever, right? So I was starting in really slowly in the end of May. Very, very conservative trading. I'd say I'd watch what other people were doing, other examples, and I would do something similar, but I'd do it on a more conservative stock. And then as like real estate investing, as it started to work and as I started to learn, and yes, I made some learning lessons as I did in real estate. But when I really started to roll with it, I just got really hungry, like I did with real estate, to learn. And, my business as a realtor is great. It's been a very busy year. It's a great business in that it ebbs and flows, and I make my own schedule for the most part. I've been able to spend a lot more time with my kids. The summer months were my highest volume in real estate sales since I got my license in 2008. And that's because, in the spring, things were kind of on hold and then everybody let out. But in the spring and even in the summer when I was really busy, get on my phone, 9:30 market opens, look at it again, market closes. Yes, that's kind of my me time these days, 9:30 to 10 and 3 to 4. And, a lot of that time, it's not like it's not work to me. It's like, I'll have one of my kids on my lap. We'll be watching a cartoon or whatever, and I'll be doing some stuff on my phone. Sometimes I'll be taking a bit of time to do some research. I'll go upstairs, change our guest bedroom into a home office. So I'll go in there to, focus for a short period of time to do some research on a company and things like that. But like I said, it's not really work. It's not really time consuming. And there are a lot of days that I don't really do anything at all. Like if my family needs me, my clients need me, it's not like this holds me up at all. So I just feel like I found a great balance with it, and I've done extremely well with it. I've expanded my strategies. I've still been conservative, but I've learned what works for me, and what I like about it is adaptable to an individual's preference, right? Like, sometimes you see somebody who's been doing this for 10 years and they're doing very aggressive trades. You don't need to do that, right? I mean, you do, or if you want to be aggressive, it's your money, right? It's your business.
It's actually interesting because the more experienced people I know are usually quite conservative. Like Lee, who we know
well, they've been through downturns, right?
The most conservative.
Yeah, yes, for sure.
It's all those newer people who are aggressive.
Yeah. His trades are brilliant. I love, I'm so glad that I signed on for his newsletter. And yeah, I take his picks, and you can play them a little bit more aggressively than he does. I mean, or not, right? But yeah, and then most of my trades are, my own pickings, companies that I believe in. I think that one might think like what I thought, number one, skepticism, but number two, that you need to go get like an MBA in finance to really, be a successful trader. Or you need to spend a ton of time on this. You just start slow. And I don't know if your listeners or you even know what 4-H is, but I grew up in a club called 4-H in Manitoba, and their slogan is "Learn to do by doing." And so that's basically what I've done is, you pick a company that you really like, that you believe in long term. You trade into it slowly. If it's working, you can add it into it. You can up it. If you change your mind, you can reverse out of it. You're not committed to. Another thing is the fees. There's not a ton of fees to get in and out of things like there was in
real estate.
Yeah. Well, and when you make money, it's realized. It's realized gains, like profits taken in your account. Bing, that sound on your phone. Bing, there it is. Whereas real estate, amazing investment. If you do the ROI on the place I bought in January compared to now, it's comparable to stock hacking. Well, some people do. I've seen some people do some crazy returns.
Stuff.
It's money that you can access at any time. I love the idea. It fits into my wife and I's long-term goal of building our financial security and wealth to fulfill our dreams for ourselves and our family, and have like a portion of your investments liquid, right? Because if you've got all of your assets tied up, and yes, right now you can, download something quickly, but, maybe at some point in the future, yes, values are still high and you've got a lot of equity in there, but something happens quickly. You need to access money quickly. Not so easy. I mean, even doing refinancing, it's like the last refinance I did, it was, they're a lot faster when you're buying something. When you're refinancing, they're like, okay,
there's no deadline.
There's no deadline, and on it goes, right?
Yeah.
So
all the people with deadlines get first. Get priority.
So I love the liquidity of it. I can pull it out. I can pull some of it out at any time.
Right. But what we were discussing before we were recording is it's cash flow as well.
Yes.
Can you share what returns you're willing to share?
Sure. So since I started trading last week of May, besides the one trade that I did in February, so since I made $112 on that first trade in February. So we won't count that in my returns. But from the last week in May to now, I'm up 57% return on my investment.
57%.
And now I added in money, piece by piece. Now, obviously, since I sold this last property, that I had for a long time, I've funded my account a lot more. So I've been able to do a lot more trades. Like, for example, right now, I think I have 45 positions open.
Busy.
Yeah. It's been a very fun week. I don't always have that many positions open, and you know what? The other thing is too, people may not realize is none of those positions are betting on things continuing to go up, right? There are positions that are hedging against it. So, sometimes someone may, in your family or a friend, you tell them you're doing this and they say, oh, I saw in the news, like the Dow was down, like say, are you okay? And it's like, I'm okay. Like it's not, you ride through the waves, right?
Mm-hmm. Yeah, it's more wavy than real estate. Real estate waves take much more long.
That's right.
Way longer to rise and fall
than
it does in the market, especially when we're looking at it daily.
Right.
But your story, though, is exactly the vision I had when we decided to do the beta course. The beta course was rushed
Right.
because I thought the crash was coming.
Right.
And that's why we had to push out the beta courses as fast as possible
Right.
to get people ready for the crash.
Right. Right.
Because you needed to have the know-how,
Right.
knowing that you're in a crash,
Yes.
and then what to do after the crash.
Yes.
You're exactly what I wanted.
That
sounds weird, but
I'm so grateful I came across this strategy, and I'll continue to work on it no matter what the market does. And the great thing is, when life is busy in other ways, like I already mentioned, that it's so easy you can do as much or as little as you want. And yeah, I think it came at the right time in my life. I think if I would have, discovered this in my late 20s, I mean, I wouldn't have had any money to fund my account anyways, but
thank God for real estate.
Thank God for real estate. Yeah. Yeah. And I just think it's just come at the right time. It's a great fit. And I even have my oldest doing a little bit of research for me. She said, Air Jordans are the big thing. Everyone wants Air Jordans, and I'm seeing more and more Air Jordans. And I'm looking at reviewing Nike earnings, and I'm looking at Nike, and I'm comparing to competitors, and I'm going to, I'm gonna enter a little bit of Nike, and looks like he's doing pretty good. I'm thinking, holiday season's coming up, shopping. I'm like, I can get a little bit more. And I've entered and exited positions on that numerous times, and I'm not. I don't want a call or a letter from the Canadian Securities Commission. I am not licensed to.
Neither of us
This is not advice. That's
not advice at all.
Historical
folks.
Fact.
We're complete morons if you can't tell.
Well, you know what? I have done well on that in the past, is what I can say. So,
which is historical fact. It's not advice.
That's right.
Past does not predict the future.
That's right.
Please go seek professional help.
Yeah. Maybe somebody will hear this in like 6 months or like a year, and they'll be like, I wonder how they're doing now. Like, did he hold that Nike position? Did he know what was going to happen to Nike, or did he know what was going to crash? Whatever. Yeah.
I don't know if you saw my comment in the chat today.
No.
About how like this is other pet company, they're going to IPO. Because there's one trend that came out of the pandemic that I didn't realize. I kind of had an idea, but only when I saw that this company is going to IPO, did it actually hit me that a lot of people adopted pets during the pandemic.
Ah, cool.
So the pet food industry is booming.
Chewy.
Chewy.
Yeah.
Right? Which is what Ron's been killing it on.
Yeah.
And apologies, folks. A mutual friend of ours has been a successful investor on Chewy. Again, past does not predict future. This is not advice, folks.
Yeah.
We will gladly give you as much real estate advice as possible if you're willing to listen. As we are licensed in that, but we are not licensed to talk about financial instruments.
he even mentioned that, it's like I said, it's past. It's had a good run, but maybe it's leveled off. Maybe it hasn't. But you have to do your own due diligence on things, right?
Everyone do your own diligence.
Yeah.
On Barrie, on Hamilton, on John, on Irwin.
Yeah.
Please do your own research.
For sure.
So I call it wealth hacking because I need a word to kind of like bring it all together. Right. And the term actually is expanding, but the first two things are, I always believe it's easier to make money than it is to save money. Right. So the best vehicles to make money I've ever seen has always been real estate. Mm-hmm. But, talking about the run up in prices that we've been talking about, the rent doesn't keep up. The reality is the rent does not keep up. Right. It's gone up, but it hasn't kept up. So in my experience, and also having leveraged a lot of properties, we don't cash flow very much. Right. But then the stock hacking has been the missing piece for us. Right.
At the same time, these days, there's been a lot of talk about, inflation, hedging against inflation. I think real estate is the best hedge against inflation. Again, that's my personal opinion, not any advice.
Well, you're licensed to talk about real estate, so I think it's okay.
Yeah,
we're not economists, though.
I'm saying it's ahead of perhaps some other options that people use for hedging inflation. It's my personal choice. There's other things like metals and different things, and that's a whole other discussion. But real estate, I think just because it's gone up so much over the years, unlike in the equities market, there is a limited supply of real estate, right? Mm-hmm. And there is an increasing demand. There is a huge increase of new Canadians coming, and I hope that at least some of them are contractors. I really need more contractors. um,
if you're a contractor listening to this show, contact John.
It took me
contact me too, please.
It took me over 2 years to sponsor my wife to immigrate to Canada. I met her in Cambodia in 2012 when I was there on holidays, and I know how hard it is to be living apart from someone. And I feel for all those people out there who are already waiting 2 years to get their family member over, their spouse, whoever. And now, this has added it on so much more time. So I think all the extreme vetting and process that we went through is absolutely important, but it takes way too long. And I hope that they have their stuff organized and ready so that when it's safe to do so, those people that have been waiting, a lot of people from Hong Kong, a lot of people from a lot of different places, but that'll be a huge increase in demand on real estate, especially the great bigger cities of the GTA. And so my take on real estate long term is, yes, like you said, there's going to be waves. There's going to be times where hey, it's not 10 offers, it's one offer. Hey, it's selling in 30 days and not 10. Or, there's going to be those waves like that. But the demand in these high demand areas is not going anywhere. So if you're, looking for long term, absolutely 100%. I would say if you're looking to make a quick buck and do a flip like I wanted to do back in 2007, this is probably not the right time, especially if you're putting everything you got on the line to do it. I was fortunate that worked out back then, but
it helped that you had some contractor skills.
Yes, yes,
right.
Yes.
Imagine if you didn't.
Yeah, no, it was like I said. HGTV, I have to thank them. They inspired me, but they do show the best of the best, even in the realtor world too. I know a lot of people who've been inspired to become realtors, and it's a great business, but they edit it very well. And like any business or any job, there are great days and there are other days that are more difficult, right? So there's a lot of challenges in helping people, and some situations are very tricky. And you just you don't always know what it's like until you get into something. But it's important that you do a combination of doing your research on what you're doing and just taking action and going for it.
It's funny because I usually ask the listener to kind of like sum up what would they tell someone or any final thoughts. I think you already gave it.
I talk a little. I'm a little long-winded sometimes. Sometimes I'm just passionate about things, right?
Yeah.
So
because you help people. I'm sure you heard it. I find people are pretty. I don't know. Maybe it's just me. I don't really always take the time to listen to praise. But I'm pretty sure you've changed a lot of lives.
It's amazing thinking back to some of the people who came to me and their dream was just to buy one investment property. And 10 years later, they have 10, 20 even. Right?
20?
And I have a client that retired at 40s, early 40s. And now he's doing this full time, building second suites. And it's because of real estate. And just, I'm always open, for people who are looking for information and new into the business. I will schedule a call, and sometimes, Louise, my full-time manager, she says, that call was an hour. You should be like charging consulting fees or something. But I remember what was like when I was new and getting into things, and there was lots of different information. And that's why it's so great. What's different in 2020 compared to 2007 is, you have these networks like your network, like iWin. There's so much education out there. And, if somebody wants to know something about Barrie and reach out to me, I'm not saying I have time to, just show you a house on a whim or whatever, but like, I'm willing to listen and give you my feedback on what your why for doing this, what you're considering doing, how it's going to fit into your lifestyle, and how it could change your life. Because it's not me I've been a small part of helping people change their lives. And that's I really enjoy it.
Pretty cool, huh?
Very cool. And so many other people have done that for me too.
One of our goals here is to have 10,000 millionaires, 10,000 six-figure side hustlers.
When I heard you and Cherry post that, I think I heard it it was one of our...
I've said it on the podcast.
Yeah, I heard it. And I love that goal. I was like, you guys are helping so many people, and I'm honored to just be a small part of this thing. I really miss meeting up with people. I'm not speak in front of big crowds kind of person. It's pretty nerve-wracking for me. Even before this, I got pretty nervous. But talking like one-on-one with you once we get going is just like a conversation. And I love hearing other people's input on things and what they're doing in their areas and how their investing is going. And I think it's been hard on all of us yes, we get to connect online, but man, do I ever look forward to when we're meeting up again. Like that Wealth Hacker Summit you did, that was just amazing. The energy. How many people were there?
Almost 1,600.
1,600 people.
Yeah. Do you know how many cops they would call on us?
Oh, we'd be in jail already.
There'd probably be like 1,000 cops. I'm not saying we'd do it.
No, of course not.
It's just weird to think about it.
Something we took for granted, right? Like it's just something that we took for granted, and someday it'll be safe to even have very, very small things. But you're going to do a big whenever it is 21, 22, you're going to do a big one, right? Are you planning?
Yeah, we haven't booked the venue, so they don't have any. We don't have any deposit outs. We don't have any time pressure.
Right.
So my requirement is that we have no attendance restrictions.
Right.
Because I don't know how many people will come.
Right.
We'll do it big, and then
I think it'll be huge. You better book a big venue.
And the thing is, we don't have to do it.
No.
Right? Like it's actually a lot of work to do it.
Right.
But
it was so much fun, though. I guess for you, it was huge. I can imagine the stress of that. What did you get up at? Like, I wouldn't have even slept the night before, right?
It wasn't good.
Yeah, it would have been like, what could go wrong?
What didn't go wrong?
No, are you kidding me? It went amazing. You know what? Sometimes when small things go like, not perfect, someone in their presentation, they get their math wrong on some little thing or something. It makes it real, right? Like, it's just
yeah. I remember we had some cable. Someone stepped on one of the cables, so some of the TVs was flickering, and the one that I wasn't ready for was I had prepared my slides and prepared giving them.
Right.
You know how PowerPoint you have the cheater screen,
right?
How you can have your notes.
Yeah.
I didn't have my cheater screen. It was just a duplicate slide. So it's just, thank God I'd practiced enough that I was able to do the presentation.
Yeah.
But the show must go on. Oh, and the timer wasn't working.
Oh, okay.
So we're on a tight timeline.
Yeah.
But no one has their time.
Yeah. Well, I missed some of the presentations more than I wanted to because there were so many people there that I hadn't seen in so long.
Yeah.
At people that, I know well, but, you kind of, lose contact with them. People that have, from previous, events that we used to meet at. And just like to see the growth, right? You run into somebody because not everybody's so visual on social media. These days, everything's, pumping about what I'm doing and stuff. And that's great. You're inspiring people and everything. But there are a lot of people out there doing some really big things that, you run into them. Oh, what are you up to these days? Oh, we just bought another 40 unit building and when we're going to be doing this development. And like, wow, like when I met you 10 years ago, you were doing your first duplex and figuring it out, right? I love that, right? Like,
guess what? I had lunch with Brian Pullis last week.
Oh, cool. Awesome.
He's not up to much.
No, just a few hundred units.
Just in the summer, a few hundred units.
Yeah. Oh, so awesome. No, so awesome. I helped them buy properties. Brian had already had a substantial business, and they're not here. I shouldn't talk too much, but I have to share that was when Kyle was getting new into the business, right? So the first properties that Brian's son Kyle, our friends bought, I helped them buy some triplexes and stuff in 11plex in Barrie, and they've because Hamilton, a lot more They're always looking for stuff. There's a bigger city, bigger buildings, right? And I think, you scale a business like that to a point where, anything under 30 units, probably doesn't fit into your business model anymore, right? So
Hamilton's about 3 times the population of Barrie.
Yeah,
something like that. But yeah, no, they love the city of Barrie. It's just where can you find a building?
Yeah, there's few. Yeah, I keep in touch with. I have a database of people that own buildings that I keep in touch with, and often the conversation is, well, John, I will sell someday, but these are so hard to find, and it's such a good building, right? Like, it's in a like I said about my forever properties, right? Like you got something that's working so well, and it's an asset class that I think eventually, the way things are going, I don't know what your thoughts are, but eventually the government is going to have to step in. This whole affordable housing plan of 2017, you remember that one, the Ontario Affordable Housing Plan? That worked out pretty well, drove up rents, and the prices are so much more affordable in 2017. That was money well spent. But, if they don't support private landlords more, private real estate investors more, then they're going to have to get into more government housing. And I don't know if listeners are familiar with what government housing and how
scary.
Yeah, how scary it is, and how financially inefficient it is. Right? It's just not. It's just. I think that some policymakers come with a position of trying to help tenants out more, but they're actually inadvertently hurting them, and it's unfortunate that supply is so low in this area. We really need more housing.
And then as a landlord myself, like I was always just gritting my teeth and taking it,
right?
Because I make all this appreciation,
right?
Like how else am I supposed to make money,
right?
And as more landlords find out about stock hacking,
we have some options.
Yeah, we have FU money.
That's right. Yes, exactly. Yeah, exactly.
We have a whole. We already have.
I know several people this year that have. I mean, there have been some of my longer term investors. Like I've taken a bit off the table, and there's been people too that, they've got, especially the people that have the lower income housing. That they've gotten too frustrated with LTV, the way that things are working, and they've decided
the rhetoric from the government.
They've decided either to move their holdings to different provinces or even different countries, or to different investment options. Yeah,
it's nice to have options.
It is. Yeah. It is. I'm in real estate for the long haul. I can't see myself. It would take quite a lot. I mean, if they really, really change it, like if they said like no rent increases for 10 years, I'd be like, okay, bye-bye. We've got no rent increases next year yet. Our utilities, our insurance, I've noticed, has gone up a lot. Inflation on building materials. I wanted to build a fence this year. My contractor couldn't find any lumber. Lumber's gone up almost twofold. Now, it'll probably come down a little bit after the pandemic, but it's still going to be high. Now, what do you think that's going to do for new housing supply? Materials, labor keep going up. All our expenses keep going up, but rents are supposed to freeze. I think the problem is that there's kind of a old idea of, again, I don't like the term very much, landlords, but real estate investors being these deep-pocketed, greedy, opportunistic, and I mean, for sure, there's plenty of
there's plenty of dirtbags.
There's plenty of dirtbags, and you know what? In the old days, like I've heard stories, both from this country and my ancestors who came from Scotland. I mean, 4 generations ago, they had like a generational tenancy. So, like basically, for hundreds of years, they had farmed this land, and so it's like you don't own it, but you pay like, share of your sharecropping. Like you've got your own structures that you built on and everything. Well, the price of wool skyrocketed. And these aristocrats decided, you know what? We don't need these people on this land. What we're getting, their cut. Kick them all off, and we're going to just put sheep, because sheep was a very profitable business. So after many, many generations, we're talking centuries, They lost everything.
Mm-hmm.
And they came to Canada. So yeah, I think,
well,
when
at least that worked out.
Yeah, very much so. Yeah. And you know what? I think that probably when they designed some of these laws in the beginning, I don't know the exact history of it, there was probably some influence from that. They wanted some balance in that, that there should be some rights and balances on both sides. But I think, especially in areas, provinces where, you have probably, I don't know the exact stat, but I'm thinking 40 to 50% of the population as renters. That's a big vote buy, right?
Mm-hmm.
Whereas if you got 5% of the population,
less than that probably,
yeah, that are investors. And but yeah, if they want to keep making it tougher and tougher to do business, then not going to be as much supply moving forward.
Right, because we're entrepreneurs. We'll rotate
our
capital.
For sure, it's a business.
Yeah.
It's a business.
Yeah, because my last rental I sold, guess who bought it? Someone who needed to move in.
All the rentals I've ever sold have been that.
Yeah. Because the reality is, like, investors, it's like novice investors don't get it. Is that, I want to buy a house, they should take my offer. Like, well, in reality, the one who's moving in will usually beat you out on the offer.
That's correct. That is correct.
And that's who we're selling to.
That's exactly it. And in my case, and in your case, I'm sure as well, it's people getting out of the GTA, right? The pandemic has really, people like, I could sell my condo and buy a house, and I get to work from home. I heard Statistics Canada released recently. They did a study that I think it was 32% of the population in Canada surveyed said that post-pandemic, they have the option to continue working from home.
Crazy.
So that's great for real estate and
for us.
For us in our
outside the GTA.
Right.
Yeah.
Right.
It's the house that I sold. It was a 6-bedroom student rental. And the family's moving in.
Right. Yeah. That's exactly who moved into my student rental. It was a big family.
I don't know how big the family is. It's more like you can't choose, really.
Right. Yeah.
What else are you going to choose in this market?
Yeah.
It's a nice house. They have stone countertops and everything. 2-bedroom, 2 full bedrooms. 2 full bathrooms and 6 bedrooms.
Yes.
I'm sure they'll take down a wall or two, but otherwise it's kind of funny. John, I'll give you the last word, and then you'll share with folks how they can follow up with you.
I think I don't know what else to share with listeners other than I think, surrounding yourself with people. Like if I look back at this journey that we talked about, meeting people, like getting together with people, even in this pandemic, get on and try to, connect with some people online that are going where you want to go. Your network is so important. Doing the right amount of research and analyzing, but not overdoing it. Don't look for this so-called unicorn, the perfect thing. Like, do what makes sense for your lifestyle, what makes sense for your financial goals, but do it and do it as soon as you can. I mean, for a lot of people, that may be a lot sooner than they think, right? It is harder to get into the market. It's harder to come up with down payments, but if you have a plan and you put it in place, it might not be this year, it might not be next year, but you've got to set the course. And most importantly, we need to take action. I'd also like to share that for me personally, my journey, I found that it's important to reevaluate your goals. So, you can get kind of complacent. Like you set a goal that you thought was so high 10 years ago. And then suddenly, wow. And then what do you want, right? What do you really want? What is your why? And for me, when I started out, it wasn't necessarily about getting rich. It was about building wealth in a way that would provide, security and opportunity. And at this point in my life, I'm 41, and time. I've been able to have a life that is balanced to where I don't need to work crazy, nonstop. My family is so important to me. I grew up, with a single mom who had to work all the time. We were in a rural area. It wasn't like it wasn't like there's other family or, it was siblings taking care of each other. And, I had a lot of great experiences through, being, a competitive athlete. And there was a lot of positive things about my upbringing. But when I think about my kids, they just want me, they want me to be there. And whether, you're younger and you don't have a family yet, or you don't plan on having a family, or you do have a family, you realize that, I realize that time, and that's what wealth buys you, is time.
Mm-hmm.
Time and options to, and then reevaluate your goals. And my wife and I sit down and go, you know what? Maybe we could do this. Maybe we can do that. Maybe our goals kind of change. We always kind of have a short-term thing that we're aiming for. Like, let's upgrade that kitchen, and we're not doing it with our savings. Let's make some more money. I got to grind on that stock hacking. I'm going to buy that new kitchen. I'm going to buy the plane tickets for my 3 kids, my wife and I, and
Mm-hmm.
we're going to go over and see our family in Cambodia when it's safe to do so. We're going to help people when we can. And, that's my advice is, go for what you want, reevaluate what you want along the way.
So I'll repeat what I texted you a few days ago. Your wife won the lottery when she met you.
No, she didn't. I won the lottery. My wife is amazing. Yeah.
Your kids won the lottery being born to you.
My kids are very fortunate, and sometimes my wife and I talk about, like, I'd love to talk more about parenting, but this podcast isn't about parenting, but I like getting my kids involved in my business. Like I said, my oldest doing a little bit of research for me on
Mm-hmm.
things, what's
Mm-hmm.
the fads,
She should have gotten you on this pet food fad.
Yeah.
If you had a dog, you would have known.
Yeah. Well, brands get like endorsements, and I don't know who the new hip hop or who the
Beyonce did the deal with Peloton.
She told me about that, right? She told me Beyonce and Peloton, right? So, anyways, I love getting my kids involved. Even my daughter, who's almost 4, she's like, look, I've got Bloomberg on the TV, and I'm thinking on things. She's like, is it good? Is it bad? Money up? Money down? I'm like, money's got, like, we're working. Daddy's working. We're gonna have a good Christmas this year. So yeah, and I grew up doing a ton of chores and that kind of stuff. It taught me responsibility and hard work. And I don't have a farm to run, but like in the summer we have a little garden, and I teach them what I know about gardening, and helping out with little things, even at a younger age. And I'm just so fortunate that I get to spend time with them, right?
Mm-hmm.
Because a lot of families, I understand it's very difficult. Our lifestyles are so hectic. And I think that this year, a lot of us, especially myself, we just realized, like, wow, we need to spend as much time as we can.
Mm-hmm.
And, that's how investing in our plan for investing, fits into what's really important.
Mm-hmm. Now, where can folks follow you?
You can find
no email addresses, please. Websites.
So
TikTok.
My name is John Beddome. It's Beddome. You can follow me on social media if you want. I'm not on there a lot, but I am on there. My website is investedinu.ca. Same as my Instagram is johnbeddome.investedinu.ca. I'm more of a Facebook person than an Instagram person.
Mm-hmm.
I don't know. My daughter, my oldest daughter, she's on TikTok now. So
Mm-hmm.
she's saying, Dad, TikTok's the new thing. You got to get on TikTok. So I don't know. Maybe next time you. I don't know.
It's like what? Like 10-second videos? Like, here's the host, and that's over.
When I was really busy in the summer, because in the spring, in the beginning of the pandemic, it wasn't as busy. So they got used to me being around all the time. And then I was gone a lot more for work, like, out of the house more in the middle of the summer. And the whole family would make me these short TikTok videos, be like, we miss you, and it'd be like some song, and they're all dancing together. And I posted one on my Facebook.
Oh, I think I saw it.
Summer, yeah. So it's just so cute, right? Like, Yeah. Feel free to reach out to me. And thank you so much, Erwin. Love what you're doing. So happy to be a small part of this.
Thanks for coming on the show, John.
Thanks, Erwin.
Before you go, if you're interested in learning more about an alternative means of cash flowing like hundreds of other real estate investors have already, then sign up for my newsletter and you'll learn of the next free demonstration webinar I'll be delivering on the subject of stock hacking. It's a much improved demonstration over the one that I gave to my cousin Chubby at Thanksgiving dinner in 2019. He now averages 1% cash flow per week, and he's a musician by trade. As a real estate investor myself, I got into real estate for the cash flow, but with the rising costs to operate a rental business, it's just not the same as it was 5 to 10 years ago when I started. Never forget that cash flow reduces your risk. The more you have, the more lumps you can absorb. And if you have none or limited cash flow, you're going to be paying out of your pocket, like I did on a recent basement flood at my student rental in St. Catharines, Ontario. If you're interested in learning more, register for free for my newsletter at www.truthaboutrealestateinvesting.ca. Enter your name and email address on the right side. We'll include in the newsletter when we announce our next free stock hacker demonstration. Find out for yourself what so many real estate investors are doing to diversify and increase their cash flow. And if you can't tell, I love teaching and sharing this stuff.